Polar Capital Global Financials was launched in 2013. That's some years after the end of the global financial crisis. And it was launched because we felt there was a huge opportunity for investors in a big global sector which was trading on quite a significant valuation discount to other sectors.
The exciting thing about financials is, firstly, it's the second largest sector globally after technology. You're getting exposure to some just fantastic businesses. Banks, could be JP Morgan in the US, largest bank in the world. Consumer lenders like American Express, or payment companies, MasterCard, Visa. Exchanges, could be a NASDAQ in the US, a Deutsche Börse in Germany. And some fantastic asset management businesses, BlackRock, Blackstone, Ares Management, ICG in the UK. You can get exposure to Warren Buffett through Berkshire Hathaway, the Lloyds of London, companies like Beazley. We see it as a great sector with huge opportunities and some just great businesses.
It was initially launched with a 7-year life in mind, and that 7-year life came to an end in 2020. And just as the COVID pandemic was striking, we offered shareholders an opportunity to roll into the second version of the investment trust. With that, we suggested that we would introduce a 5-year tender where investors could liquidate their holding at the end of that next 5 years at net asset value less costs. And that means that they can get out without worrying about where the discount would be at any one point in time. During that next 5 years, we were able to grow the company quite materially, up to about 600 million where we are trading today. The outlook for the sector, which still remains on an incredibly good valuation. So we think going forward, you're getting into quite an interesting sector that's large, diverse, it's global, and it's trading at a very big discount to a lot of other sectors in the investment universe.
PCFT has delivered over 200% since its launch in 2013, and that compares with UK banks that have returned less than 100%. So for UK investors, it's been a great way to diversify their exposure to the global financial sector. But also at this juncture in markets, which are very concentrated, we think financials give you extra diversification from volatility in markets, especially if that's focused on one sector. Secondly, the rise in interest rates in the last 2 or 3 years means banks and insurance companies in particular are making much more attractive returns. So their profits have improved, and we think that trend is going to continue because we don't see interest rates going back to the levels that we saw 4 or 5 years ago. The third point is regulation. Over the last 15 years, there's been an enormous increase in the amount of regulation that impacts the sector, increasing capital requirements, costs, and so forth. Now, that's quite understandable because there was a lack of regulation in the run-up to the global financial crisis. We would argue that pendulum has swung from too little to too much. And we're starting to see, especially in the US, but also in Europe, steps being taken where that pendulum is going to swing back a little bit from where it is today. Now, the sector is still going to be very highly regulated, but a more constructive relationship with regulators, a more balanced approach to the issue is a positive tailwind for the sector. The Polar Capital Global Financials team is made up of 5 people. There's myself and George Barrow and Tom Dorner, and we're 3 co-fund managers of the trust. George and myself joined Polar Capital in 2010. Tom joined us back in December 2023. We're also supported by Nabil Siddiqui. He's been part of the team since 2013, and Jack Deegan, who joined us in 2017. So together we've got close to 100 years investment experience focused on the sector, and believe that we are certainly one of the largest in London focused on it.
We've got a great investment team behind us. Nick and his colleagues have been running this portfolio for quite some time. They've got a very deep and broad knowledge and understanding of how the sector is moving. One of the things that's held them back is the fact that we've had a growth and income mandate. And you will have seen in the report and accounts that we're moving with shareholder permission at the AGM to a capital-based dividend. This means that the portfolio managers don't have to go and find dividends. The consequence of that is that it becomes a more unconstrained mandate, and the fixed income element, which has been very well used by the team over the past 10 years or so, will be moving into a more tactical element rather than a strategic element to the portfolio.
It's worth highlighting that the added benefit of that proposal is it gives us, the managers, more investment flexibility to choose whichever stocks we want, whether it's an income perspective or a growth perspective. So less constraints on us, and we'd hope that would be additive to performance.
Well, I joined this company at a very interesting time. It was literally a year before the first reconstruction. I saw a huge opportunity for investors to invest in this dynamic and unloved sector. And we think that the next 5 years could be equally as good as the past 5 years. So the tender is a great opportunity for those who wish to encash their investment right now. But we feel that that shareholders have been pretty loyal over the last 10 years or so, and we hope they will continue to enjoy that ride.